Hi traders and welcome to the Technical Analysis Market Watch on Friday the 17th of January. So I've seen a pretty exciting week on the trading front with the market liking what the inflationary data gave it and also a good earnings start for the bank. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see we've continued on from the bit of, well, we sold off last week. Last Friday, obviously, we had a pretty big downturn, but it did basically get itself back up above that very strong resistance point, resistance from below anyway, and you can see it's trading above that 62-cent mark, which is pretty important for it because we know that it's really the last line of defense before it goes all the way down to probably almost parity. There's not a lot of support after this level, so this little bit of resistance zone that did get broken through in the last two candles is quite important, and it could signal the start of a bit of a turnaround. That said, we've got the 20 moving average bearing down on it again, and it hasn't broken through. So we've got a bit of a doji candle for today's trading. We need to close above that 20 moving average before we start getting excited about potential long opportunities. And even if it tests it around that level and comes back and potentially goes 62 again and then pushes up, that's going to give us an inverse head and shoulders and then a potential move all the way back up to 64. So we've got some good things happening on the Aussie here, but at the moment it hasn't done what it needs to do in order to get excited about going long. And that's going to require a daily close above the 20 moving average and effectively a close above 62.50. So that's what we're really looking for before we start getting excited about a long opportunity. But it did the right things this week, and it did push back up above 62 cents, because if we close underneath here for the end of the week, it was probably going to look pretty dire for next week, really. We'll look at the dollar index a bit later, which of course is helping govern what's going on here. But we must be a bit mindful that we've still got a little bit of work to do. But if we can get above that 62.50, it will give us an opportunity to start looking for long opportunities again. But if we do get, if we sell off again in the next session, and we start to close below that sort of 61.80, and that's where we start the week next week, then I would be starting to err on the side of pushing down to those previous lows again. So yeah, one to watch and in a very important zone. All right, we'll move over to the US dollar CAD. And it's done all the right things this week as well. Look, it looked like it's starting to get a little bit tired up here. You can see last week we were pushing up, obviously, to these highs, and then we sold off. 20 moving average caught it again, and it has rebounded off that level. But the fact that we haven't been able to break through in the last 5 or 6 attempts, you can see these candles have tried to break through this level at 144.50 and failed each time, is starting to be a little bit of a concern for it. And MACD is starting to drop now. So we're starting to see a little bit of a flat line of the MACD indicator. And we can see, obviously, that's the 12 and the 26 starting to flatline a little bit. And realistically, we're not going to be looking at going long until we can actually get a close above 144.50. If we get a daily close above there, that's a different story altogether. And then we can start to look at new highs from that level. But at this stage, I would be looking for probably a bit of weakness. And if we get a close below that 143 area, a daily close below 143 would start to give me an inkling that we're going to start looking for a few shorts. The 50 moving average would be the first target. But it has been very, very strong. And I wouldn't want to be fighting this trend until it's actually given us a lower high, lower low sequence on a daily time frame. And it would do that if we get down to 143 with a daily close. That would give us the lightning bolt that we're looking for, and then we can start to target some lower levels on this one. So pretty good trading on the CAD. All right, US dollar yen, it broke through the 20 moving average and starting to look very, very shaky now. You can see similar to the CAD in a sense, but it did get a little bit higher. It did actually break slightly higher, but it did start to flatline a little bit. And yeah, it did find the resistance a little bit too strong. And then down she came, broke past the 20 moving average. And although there is a little bit of support here around that sort of 155, it's not a great heavy level of support. We've got this area here at the 50 moving average, and that's probably where it'll catch it again. I'd be starting to think that if we get a break below the 50 moving average, that we're probably going to start targeting that 153.50 area, which is probably a better area for support. Still got a little bit of support here though at the 50 moving average and that 154.50-ish area. We know we've got a little bit there and the moving average. So look for that to be a bit of a bolster. If we see a series of higher highs and higher lows on a smaller time frame from around this area, then we can look at trading back up to the 20 moving average, which would be around that sort of 156.50. But if it doesn't do that and daily closes below that 154.50 area and below the 50 moving average, I'd be starting to target that 153.50 as the next move, because that's where the next real support is for this one. But pretty good trading on the yen. If you go to the smaller time frame, you'll see what I'm talking about. It's given us a lot of opportunities to actually get in. You can see, even though it looks like it's sold off quite aggressively, all the things we talk about each week, pullbacks to the 20 moving average all the way down. So you're able to get in on that on multiple occasions if you were watching it and trading that move down. All right, over to the dollar index. And look, it's been a bit of a mixed week. If you look at it, from the candles structure, you've got a lot of mixed, results really. You got a big, a very big candle here. This is an evening star. And pretty much played out because the body of the evening star matched where the price got to, hit the 20 moving average at around that 108.60, and then rebounded off there. It's found itself above the 109 again, which is a pretty important zone for it. But these highs are looking a little bit weaker than the previous highs. So just be a little bit mindful there that, look, while the 20 moving average is holding it, if it can hover here and get some consolidation around this level, I think it would say a lot about how much strength there is in the dollar index. But if we do get a break below the 20 moving average, I think we'd probably start to look for moves back down to around that sort of 108 area. But while it's holding firm above 109, we're looking for long opportunities. So we'll see if we can get any opportunities on the lower time frames for higher high and higher lows. And if we get that, it's an opportunity to trade it back up to that sort of 109.80 area. Of course, the euro is the one we want to trade, and it's the one that, basically, it's been a funny sort of week for it as well. Yeah, we had the morning star pattern. It is at support, but it didn't get through the 20 moving average. This is the one that we're really interested in. If we can get a series of higher highs and higher lows from this level around here, the 20 moving average will be the first target around that 103.50 because it is starting to flatline a little bit. But if we get above that 103.50, similar to the Aussie, I think we're going to look for a couple of potential long opportunities back up to the 104.50. At that point, it's starting to look pretty strong. The dollar index would obviously have to be selling off at that point in order for that to happen. But we have an opportunity here where it is very strong support, and it looks like it's starting to level out a little bit. It's found this base a few times. And if it can keep itself above the 102.50 area, we'd be happy enough to take any long opportunities up to the 20 moving average in the first instance and wait for a daily close above the moving average before we start looking at longer opportunities up to the 104.50. If we actually break down below 102.50 and we get a daily close below there, I'd be starting to target the shorts. If that's where we wake up on Monday, I'd be starting to target the shorts up to around that 101.80 as the main target. I'd still be keeping it scalping. I wouldn't be looking for anything past this level until it actually gets broken. So trade between the zone of the 20 moving average and the previous low to give probably the best chance of success on that one. And the S&P 500, look, it's given back a little bit of yesterday's gains. It had a massive day yesterday. The inflation data was music to the ears of the market. And obviously, we had some pretty good earnings coming out of the US as well. So, that's going to continue on over the next few weeks. So we must be mindful of that when we're placing our trades. And it can play havoc with the indices movements. So just be careful. But look, it's looking still pretty strong. It's trading above the 20 and the 50 moving average. They're both flattened out though. So while it's trading above there, it hasn't broken the previous high and it's still in a downward trend. So just remind yourself of that before you start looking at anything too ambitious until we actually get a close above that 59, sort of 70 to 80 area. A daily close above there, and then all of a sudden we've broken that high again and we can start to look to the all-time highs around the 6,000 and 6,100. But until then, we are still in a downtrend, and realistically, especially if it closes below the 20 moving average. If we close below the 20 moving average, and that's where we're trading on Monday, I'd be starting to target these lows again and probably look down for a 57.50 push. That would be the ideal move. 58.60 has a bit of support there, obviously. But first of all, it's got to close below the 20 moving average before you get excited about a trade like that. So just be careful. This is the zone that we're after, in between where price is at the 20 moving average and 58.70. That's the most likely trading zone for scalping. But if we get a daily close above that 59.70, then we're going to start looking at highs up to that 6,050 to 6,100. So pretty good trading coming up on the S&P. I think we just have to be a little bit patient as to which direction it goes. All right, thank you very much for joining me this week. We've seen some pretty good trades. Hopefully you're able to take advantage of some of those. The levels have held up pretty well. Just be mindful, though, we are going into earnings again, so just be careful for a little bit of volatility that could be coming our way. Have a great weekend, everyone, and I look forward to seeing you all next week.